actually take this conversation forward with him. Devang Mehta is Director and Head of Equity Advisory at Spark Capital Private Wealth Management. Devang, as always, thank you very much for joining us today. I don't know if you could hear Reema go through that entire report that, Motilal has put out on what the earnings season has looked like so far. What is your reading of it, and, how do you see the sectoral performance as well that's come through in Q1?
Thank you, Pavitra, for having me on the show. Pleasure, as always, to be on CNBC-TV18. Yes, I think clearly the result season, the underlying strength has been seen in this result season. Three things which are key takeaways. One, of course, the revenue growth might have sounded a little more muted. The earnings growth is more or less in line. Of course, there would be hits and there would be misses for sure. But we have seen margin expansion across a lot of companies. Domestic cyclicals has done very well. I think I was just reading through that, what Reema was mentioning about. That also augurs very well. Most of the companies, what we have seen, have shown positive body language. The management has shown extremely positive body language, and the commentary has been quite robust. I think outside of Nifty is where I think key takeaways are that most of the companies have reported decent set of numbers. Companies have shown EBITDA expansion. Companies are also strongly guided towards what is going to be growing. There has been expansion. A lot of companies have guided towards brownfield, greenfield expansion as well. I think Capex, credit growth, consumption, overall, if you look at any of the sectors, even pharma, for that matter, has seen a big turnaround. So my sense is that numbers are more or less in line. It's a confluence of good sentiment towards equities, domestic and FII flows, as well as earnings growth for the next 2-3 years. Probably could, at least a conservative figure could be put around 13, 14, 15% type of earnings growth. I think markets can sort of replicate that type of earnings growth in terms of its trajectory as well.
Okay, got that. Devang, let's talk about some individual sectors. Like Reema was pointing out, the interesting aspect of this report was that they're talking about downgrades even for private banks, though at a headline level, I mean, the large Nifty sort of names, we don't see a miss. I mean, ICICI was spot on, HDFC was fine. How are you looking at the financial space? And if you were to put some fresh money to work, where would you place it?
I think yes, clearly there is where the bulk of the buying would also happen, and most of these companies, right from HDFC Bank to even ICICI Bank to even Axis Bank, the numbers were as such pretty good. Yes, there was already an expectation of NIMs getting a bit compressed, and some of the banks even showed that. But I think most of the banks are right now beneficiaries of clean balance sheets, right from private banks, which already had clean balance sheets in the last 2-3 quarters. PSU banks also cleaned up their balance sheets. I think the robustness of the balance sheet strength is one thing which can probably take forward more credit growth. Secondly, yes, the earnings of these companies have also sort of improved. The better part is that the fee incomes will also tend to rise as we get into a trajectory of sort of growth, and in an economic expansionary phase. We always say that the banks probably grow at 1.5-2x of what the economy grows. I think we are getting into that type of a scenario where you can't sort of ignore BFSI. Yes, a lot of these companies have given returns ahead of time. There might be a bit of consolidation correction in this sector as it was sort of a over-owned sector. For that matter, yes, it can go into a consolidation mode. But otherwise, yes, you need to have BFSI as a core part of the portfolio as well. And that too, this private banks, which I mentioned about.
Any other sector you're most confident about? One is holding BFSI in your portfolio. Which other sector are you bullish now?
Yes, so one interesting theme which comes across is capital expenditure, which went through a long period of hibernation. In fact, 6-7 years, everybody said that Capex would come out, but it didn't come. I think clearly right now, being a pre-election year, there would be a lot of government fiscal expenditure, which we are already experiencing. I think the railway Capex, just to put a point in context, 80,000 crore was the Capex which was done 3 years back, which was announced for railways. And now if you look at the Capex, it's roughly around 2.5 lakh crore. So I think all this is a big benefit for companies, not only the PSU side of companies, but even private companies which are oriented toward Capex, be it construction companies, be it cement companies, be it capital goods, ancillaries, power ancillaries. I think this will be a major beneficiary. As such, we are seeing not only public Capex, but even private Capex coming to the fore. So I think multi-year, though these companies have sort of a shallow cyclicality, but I think the 3 years, this theme seems to be more structural rather than cyclical.
Okay, got it. Devang, some of these smaller themes that we have already discussed and have already run up so much, the likes of defense, railways. Do you think that these are still good pockets to get into at these kinds of levels, or do you think you need to wait a little bit before you get into this space?
I think yes, to get into everything and anything during this phase of a market would sort of not be such a great idea. You need to just do some bit of homework and look at the fundamentals or look at the robustness of the business model, and stories wouldn't sell as such, right? It has to be backed with hardcore fundamentals. So you're right. Some of these themes have run a little ahead of time. Yes, one can probably wait or take a pause over there, look at the portfolio, reflect in the portfolio, and again, look at themes which I mentioned about. There are a lot of proxy plays as such, right? So for example, real estate is doing well. If you are not confident on the real estate stocks as such, there is a lot of proxy play in sort of construction materials, home improvement, building materials, even cement. As I said, most of the cement companies, I was looking at the numbers of Ambuja, Ultratech, KCC, most of these companies have delivered a good set of numbers. So I think these themes are still about to be played. Yes, maybe that there is some bit of price correction and valuation correction. If it comes, nothing like it, probably I think a lot of people who are sitting on the sidelines would come and sort of start buying this type of businesses.
Okay, all right. We'll leave it on that note for today, Devang. Thanks very much for joining in. By the way, a quick check back on the screen.